Hey guys, it's James, and today I wanted to show you my M1 Finance portfolio. I wanted to show you all the holdings that I have within the portfolio, a spreadsheet that I built to be able to do a little bit of a deeper dive into the analysis of each and every one of my holdings. I also want to show you a valuation technique of how I know which holdings to buy each and every week or each month. Whenever I dollar cost average into the portfolio, how do I know which ones to weight a little higher than the others? So with that, let's go ahead and jump into the spreadsheet and let me show you my portfolio. Now, this is my portfolio that I'm just sharing with my YouTube community. I do have other retirement savings in my 401k that I'm currently maxing out. So this portfolio might not be as large as some other portfolios that you see here on YouTube, but I might get around to showing you my 401k portfolio as well if you guys are interested in that. And if you stick around to the end, I'll show you where you can get this portfolio tracker yourself to be able to analyze your portfolio in the very similar fashion that I do here. So let's go ahead and jump into the video. Hey guys, here we are over on the M1 Finance. This is my dividend portfolio, and currently the current value is $2,036.74. Right now we are down about 2% for the quarter and a total of down 9% overall. But what I want to show you here is my holdings tab right here. So it is currently sorted by value. So my largest holding is Apple, Microsoft, JP Morgan, and then Toronto Dominion Bank. So tech and financials. And then we go all the way down here, and the smallest amount of holding that I have is VFC Corporation. So these numbers right here, this is the main screen I'm going to be looking at every time I take a look at my portfolio. I like to see how many shares I have of each portfolio, what the average price is, what the cost basis of that is, and my unrealized gain. If I were to sell, I would be 17% up on Apple, 10% up on Microsoft, and so forth. And then what is the actual value? If I were to sell all of my Apple shares, I would have $166.19 that would go into my bank account, and then I would pay taxes on this $24 in gains. So let's go over to the spreadsheet and dive a little deeper into each of these 32 holdings. This is a spreadsheet that I put together, and if you wait to the end of the video, I'll show you where you can get access to the spreadsheet if you want to go ahead and delete all of my holdings and put your own information in. But as I do with all of my spreadsheets that are available, all of the yellow highlighted information is my inputs. So we have our holdings info is highlighted yellow, our dividend discount model and grams model highlighted in yellow. And then going from left to right, whenever you input in the boxes that are not highlighted yellow in the yellow sections, the green will spit out your output. So if we delete this here and delete these two things right here, you can see that it takes away our information right here under our profit and loss section and our pricing section. So if we went ahead and undid that, or if we went ahead and took that away and put these numbers back in here, you can see this populates out. So in our profit loss, this is the price I paid, $127.25 for 1.83 shares for an average of $69.43 per share. And my current value, if I were to sell these shares, I would receive $118.18 in my bank for a unrealized gain of a negative 7.13%. Now the only thing I'm putting in this calculator are these three values right here, and everything else will calculate. The name will populate. Here's a 200-day look at the price performance, and you can see it's going down. Today's price is $64, 52-week high of 86, and 52-week high of 58. And then like so for all of my 32 holdings, I would like to get to a point where I would probably trim some of these different holdings, some of the companies I'm not very familiar with. When I built this portfolio, I just wanted to have around 2 to 4 companies in each sector, and then trim back as the portfolio got a little larger. So here's the profit and loss column. This is the price I paid. This is my value if I were to sell it, and this is the unrealized gain. Then we have our totals right here. 236.98 is the price I paid, and the current value is 236.66. So we're about 33 cents below our current price that we paid, which is about a negative 0.02% unrealized gain, which matches very closely to what we have here. The only discrepancy is how much decimal places I go for my shares. So here's our pricing information. So here's what I'd like to show you. Whenever I do my dollar cost averaging, what I like to do is, instead of just going ahead and putting the entire amount that I dollar cost average equally weighted into all of the 32 holdings, I'd like to see if maybe ExxonMobil or maybe Johnson & Johnson, maybe they're a little bit more undervalued, whereas maybe Dow being a negative 17%, possibly something wrong with the company. Maybe 3M, you can see 3M's price performance has been fairly poor. Maybe I don't want to dollar cost average into these different holdings here this week or this month. Maybe I want to weight a little higher Johnson & Johnson. Maybe I want to weight a little higher Pepsi or Procter & Gamble. Well, this is where these inputs come in. We have our dividend discount model, very similar to the discounted cash flow model. And discounted cash flow model is the best, or the DCF model, according to Warren Buffett, is the best valuation technique out there. Now, the dividend discount model is sort of a watered down discounted cash flow model, where if the cash flow for the company is continuing to go up, it is assumed that some of these longer standing companies highlighted in blue, that's what the blue highlighted is, it's understood that these companies, since they are dividend aristocrats, that's what the blue highlight is for. If their dividends are going up, that means their cash flows are probably going up at a very similar rate. So before we dive into how I actually know, or what I would actually do when I dollar cost average, which funds to actually add my cash into each week or each month whenever I add money into the portfolio, before we dive into that, let's go ahead and finish out the rest of this spreadsheet here. This is Graham's model. It's another valuation technique to be able to determine the current value of these different holdings. And ultimately, this is the outputs. This is what the dividend discount models is actually telling me. We're not going to go over Graham's model today. We're just going to take a look at a few of these dividend aristocrat companies and see what the numbers are telling us, and compare that to our analyst rating. Now, this analyst rating is going to automatically populate if you have a ticker symbol in here. So this analyst rating is coming from the website FinViz under their recommendation, and this only takes about one analyst's rating as far as I know. And this is an example here. This is Realty Income's FinViz web page. You come down here to this table, and what the spreadsheet is doing is it is pulling this number right here, 2.2 analysts mean recommendation, 2.2. Come back to the spreadsheet. We look at Realty Income, and we can see we have a 2.2 analyst recommendation. Anything under a 1.0 is a strong buy. Anything between 1 to 2 is a buy. Anything between 2 and 3 is a hold. Anything below a 3, between a 3 and a 4, is either sell or maybe reduce the amount of shares that you have of these different companies. So the only two sells or are reducing of our weight would be Walgreens and 3M. And if you take a look at their current 200-day price, you can see it has continued to drop. And then looking at 3M, it looks like it has in the red as well. So that might be something that we look into to possibly reducing a little bit of the amount of shares that we have. But let's go ahead and do a deep dive here into the dividend discount model using these dividend aristocrats. So we have ExxonMobil, J&J, Walgreens, Pepsi, Procter & Gamble, Realty Income Corp, VF Corporation, 3M, and Chevron. So that would be 1, 2, 3, 4, 5, 6, 7, 8, 9 different dividend aristocrats in my current portfolio for my YouTube channel. So let's go ahead and do a few of these, and I do have these in boxes, and I'll tell you why later on here in the video. So where do I get these numbers from? Dividend growth rate and current dividend payment for ExxonMobil. Well, Seeking Alpha is a very good resource to be able to quickly find this information, to do a quick valuation. And depending on what the valuation would come out as, if it's undervalued or overvalued, that would actually garner me to go do a little bit more research to see how valid the dividend discount model valuation, if that number is valid. So real quick here, we are on ExxonMobil, taking a look at the dividends tab, going under the sub tab dividend growth. Just 4 numbers I want you to take a look at here. Their 1-year dividend growth rate trailing 12 months is 0.86. Their 3-year, 5-year, and 10-year is 1.7, 3%, and almost 6%. So you can see it's fairly erratic, not very consistent as maybe some of these other dividend aristocrats that I'm going to show you here. So what we have to do is try to determine a dividend growth rate that we want to put in for our model. So anywhere from about a 0.9% all the way up to a 6%. So that's a fairly wide range. And then come down here, the last dividend payment or total annual dividend payment was $3.49 in 2021. So we have in here $3.49. And if you recall, the dividend growth rate was anywhere from 0.9% all the way up to 6%. So let's just go to the absolute extremes. If it was 0.9%, let's go ahead and change this to a percent. Now that we have 0.9% in here, what is the dividend discount model telling us? It's telling us that ExxonMobil is valued at around $35. Well, its current price is $88. You do see it has gone up, and that could be to some other circumstances, such as the war, such as energy is in high demand right now. That could be a reason why it's going up. But if you take a look at the analyst rating, right now they are just saying it's a hold, maybe just due to the volatility that the current energy market is in. But if we take this all the way up to 6%, if you would assume that their dividend would be going up 6% over the next year, their dividend growth rate, it would actually value ExxonMobil at around $75, which is still a little lower than its current price. So ExxonMobil is probably one that I would hold off on actually putting some of my money into. So coming down to Johnson & Johnson, let's go ahead and go to Seeking Alpha and see if we can find a good dividend growth rate for them. So real quick, J&J, we're already on the dividends tab and the dividend growth sub tab. Just take a quick look at their 1-year dividend growth rate is a 5.4. Their 3-year, 5-year, and 10-year is a 5.7, 5.8, and 6.4. So let's go from 5.4 to 6.4 for our dividend growth rate and see what the dividend discount model is giving us. And then in 2021, we are at $4.19. So $4.19 for the dividend payment. If you recall, 5.4 to 6.4. Well, 5.4 is giving us a value of $242, whereas J&J's current price is $171. And you can see that over the past 200 days, J&J is trending upward. So it is possible that J&J is undervalued at the current moment. So if I were doing a dollar cost average for this portfolio here coming on Monday, if I were adding a certain amount of money in, say it was $250 a week, J&J is something that I would overweight whenever I had my $250 in. I'd probably buy a little bit more shares of J&J than I would for ExxonMobil. Coming down to Walgreen Boots Alliance, as they call it, you can right off the bat you can see it's at a 3.1 rating. So it is either underweight in your portfolio, or you should underweight it, or you should sell off some shares. So let's go ahead and check out Walgreens. Let's see what Walgreens current dividend growth rates are at. WBA, go to dividend, sub-tab dividend growth. The 1 year is 2.1, the 3 years 2.7, 4.9, and 7.8. So you can see quite a drastic slowdown over the past 10-year average dividend growth rate from 7.8 all the way down to 2.1. Its current dividend payout for a year is 1.89. So we have 1.89. So if you recall, it was 2.1% for our dividend growth rate on the low end and all the way up to 10%. So let's take a look. Let's see what our spreadsheet tracker is telling us. If we have the analyst telling us to sell it, if we have our dividend discount model at 37 with the current price being at 38, and we see the 200 day moving average going down, that could trigger us to tell us probably don't add too much more into Walgreens, or if we go off of the analyst rating, probably go ahead and sell off some of our shares. But if we were to see over the course of the next 3 to 6 months that Walgreens dividend growth rate is starting to go up, if we see that their growth rate may be going up to 4% year over year, you can see it would value Walgreens at about $59, which is higher than their 52-week high, which then you would probably start to see Walgreens start to come up. So it's all depends on the current situation of Walgreens. But for this current month, I would probably not add too much more into Walgreens. And down to Pepsi, and again, this is in a box as the same as J&J. So that means when we get done this analysis, it's probably going to be one of the funds that when I dollar cost average, I'm going to add more shares of Pepsi than I would some of these other holdings. Just real quick, running through the exercise again, going to Seeking Alpha, typing in PEP, tab dividend, sub-tab dividend growth. We see the 1 year dividend growth rate for Pepsi is 5.6. The 3-year, 5-year, and 10-year is 5.4, 7.4, and 7.7. So anywhere between 5.4 and 7.7 would be our dividend growth rate. And then the dividend payout for the last year was $4.24, or 25 if you round up. So with that in there, on the low end, Pepsi is valued at around $293. And if you recall, on the high end at 7.7% dividend growth rate, what happens is it throws the dividend growth rate model into a negative valuation, which basically would indicate that this dividend growth rate would probably be unsustainable at a 7.7% growth rate. So let's back it off closer to a 6. If it was a 6% growth rate, we would value Pepsi at around 500, or if we back it off to the 5.4, or maybe even a more conservative growth rate of a 5%, would value Pepsi at 229. If we come over here and take a look at its current price and its 200-day moving average for Pepsi, you can see Pepsi is trending upward. It has a higher price than it did 200 days ago, and today's current price is $174. So if I were dollar cost averaging this next week, I would add more shares of Pepsi than I would for Walgreens. And I'm not going to do the rest of these dividend aristocrats for you, but I think you basically get the picture here. If you would like to do a deeper dive with the discounted cash flow model or Graham's model, you can come over to the valuation tab and go find some free cash flow numbers for the past 5 years, find their cash and debt number for the discounted cash flow model, and it would calculate your intrinsic value with a margin of safety and the current price of the current ticker symbol J&J 171, and then it would calculate the difference between the intrinsic value and the current value of J&J. If you guys wanted access to this spreadsheet to be able to upload your holdings information and play around with the different valuation techniques to be able to determine which holdings you want to overweight and which holdings you want to underweight, you can head over to Patreon and sign up, and you can download the Dividend Portfolio Tracker spreadsheet. I also have 2 other workbooks that when you sign up on Patreon, you'll get access to. Workbook 1 would be our future value workbook, where you can determine your portfolio size with various ticker symbols and ETFs. If we come to J&J and just put in their dividend yield of about a 2.4%, 0% expense ratio, if I were to add about $50 a month with J&J's expected annual growth rate of around 5%, if we reinvested the dividends and we had $2,000 of J&J in our portfolio, this is how we could expect J&J to grow with these growth and contribution numbers over the next 10 years, and then again the long-term growth for J&J. Then you can also type in ETF ticker symbols in here, such as SCHD, and see what you could have over the course of 10 years with these growth and contribution numbers. Also, my budget spreadsheet tracker, if you guys want to figure out where in your budget you can squeeze out to be able to have a larger amount of savings between your expenses and income to be able to boost your portfolios. I also have this little tool here as well. So if that interests you, if you want to have a copy of this dividend portfolio tracker, the budget tracker, and our future value workbook, head over to Patreon and sign up. And with that, thanks for watching.